GM, this is Morning Markets. It is Friday, the 19th of September. So, looking at the Bitcoin chart, have some round number levels drawn out here. So we got 120K, we got 115K, and 110K. And if you want a super simple view of Bitcoin, you don't want to lose 115K here. Anything above that is just chop and noise. So, no need to get too emotional or make drastic decisions while Bitcoin is just between current price and 115K. That can just be classic chop and consolidation for a move higher, since we are in a prevailing uptrend. Therefore, you expect a trend is your friend. Every consolidation is going to lead to trend continuation until you get a sign of a trend reversal. And the only way a trend reversal from here is confirmed is if we close below 115. And of course, 115 is also basically that value area low level that I've been sharing with you guys a bunch. So all comes together around there. As long as we don't close below that, this can all just be consolidation, and we can go as low as 115. That ideally then you want to see get bought up by bulls. And from there, expect the trend to go higher until we start closing below that value area low. Very simple. Because what you could be seeing is something like this, where Bitcoin broke down from its previous range, much like it broke down from this previous range. You come down, you then have a big bounce, which immediately gets retraced. So this was a bullish attempt to reverse this downtrend, which got immediately pushed down and invalidated. When price comes back to that level, swept it, took liquidity, chopped, consolidated, went back above, went back below, and overall it was a consolidation within a prevailing uptrend. So led to trend continuation higher. Very simple. And we got something similar here. So after the breakdown from the range, we had a nice reaction bounce here where buyers tried to reverse price and went from 112 all the way to 117. So a big push. And right now we've currently swept the liquidity here. So fractals, of course, they're not used to make trading decisions based off, but I'm just showing an example of what it could look like and how price, after taking this liquidity, as it has done there, yes, can lead to chop, but that chop, as long as it's within a consolidation, is still perfectly bullish. It's not bearish until price closes below the structure level, which would have been here, but price did not close below it. Stayed above, and that structure level for Bitcoin is currently this 115K level. So any chop in here can just base Bitcoin for a push higher in the coming days to weeks, because so far the reaction to FOMC, it's been good overall. So don't overthink it. We're seeing a little dip here today. Interesting to see how the New York session closes out for Friday, and of course the weekly close, but don't read into the tea leaves too much until price gives a confirmation of an actual reversal, which would be closing below 115K. So that is everything Bitcoin. And if we look quickly at how some other markets have been moving, so I'm going to keep this morning market shorter than the last two because I know they were lengthy deep dives. And today's probably not going to have much interesting price action since it's a Friday, but looking at gold, rejected the highs, fell back down, so retraced this Monday bullish candle. Good to see. Ideally, you want to see now this set up more consolidation here. Looking at stocks, so that one here. Stocks since Wednesday from C, they're still trading higher. So good to see from a risk on gauge perspective. Stocks are still getting bidders bidding in reaction to that FOMC meeting. If we look at the dollar quickly, still putting in that bullish reversal after this sweep over here. Now just seeing, do these daily 12 and 21 bands act as resistance, or this 50 EMA band act as resistance as it has before during this downtrend? If it doesn't, then potentially you could see a move open up to 99, which potentially won't be good for risk assets. That's not a 100% rule, but generally that has been the case. So also keeping an eye on the dollar here. So that's it for the daily closes. Let's take a look at Ethereum. To grab this chart here. Very simple. ETH continues consolidating within this range between all-time high and the high time frame SR level. And the midpoint for intraday trading is 4.5k. So that only really matters on super low time frames. When you're looking at Ethereum here, it's now setting up a compression pattern. So watching for which way this compression pattern breaks, because ETH is now making lower highs and higher lows, compressing, and volatility is squeezing, which leads to volatility expanding in either direction, either up or down. So the more ETH volatility wise reduces, the more likely a huge volatility move could be coming. And that is, of course, denoted by these compression patterns. That is why they do work. There is a science behind it, if you like. So other than that, that's really it for Ethereum. Nothing interesting intraday. You're now just watching this daily chart. Looking at Sol. So actually, in yesterday's morning markets, what did I say? I said, wait for a nice full-bodied H4 breakout candle of this box, this consolidation here. And that's exactly why you wait for that confirmation, because what happened, Sol pushed up, got met with sellers immediately, pushed it back down, trapping breakout buyers all in this wick who are now getting absolutely wrecked and flushed down. And all you had to do was simply just wait for a candle close and not FOMO in. Wait for those confirmations. That's what I mentioned yesterday. So we didn't get the H4 close above. Instead, we had a false breakout, and that's leading to a little dip here. But if this H4 50 EMA holds, then everything's fine on Solana. And going on to the daily. Now, what you're looking at is anything above this low holding remains bullish. This could simply be a trap for bulls initially. Price then dips back to these 12 and 21 EMA bands, wrecking those breakout buyers, but then shorts get too excited, price finds support, and pushes up for the proper breakout. You saw it over and over here. What is this? If you guys remember, the other week I was mentioning you, on Sol you had false breakout after false breakout. It's the exact same concept. Trap bulls, wreck bulls, trap bears, wreck bears. Then repeat. Breakout trading typically has not been, the best form of trading, especially in crypto. So often breakout traders, they do just get wrecked, and it's actually the third or the fourth breakout being the one that holds. So that's really it for Solana. Path could look something like this in the bullish example, and you go for a later breakout. These bands then hold. And of course, if Solana is going to be bearish, what you'll probably see is a flush through this daily low here, this order block, which led to the recent high on a close basis. And if you get that flush below, that's the show of weakness, and any lower high could then lead to a further pullback. and that would be your lower high there. So that's what to watch out for on Sol. Now next up, another runner has been BNB actually. Hit 1,000. On BNB you have some really clear levels. So you've got 1,000. If I can type. There you go. You've then got 900. And this is going to show you another example of how not just on Bitcoin, these round numbers can be very useful in your trading. Again, it's just because it's a typical place where investors and traders are likely to put their bids and their asks. In other words, their limit buys, their limit sell orders. So what did we see? Well, 700 acted as resistance on multiple occasions. Once, twice, 3 times. Then we broke through, led to continuation to 800. Then you see 800, initially reject. Had some chop above and below. Once you get back above it, led to 900. 900 found resistance, that's where sellers came in. But the pullback held these daily bands, led to new highs, broke through 900, that led to 1,000. So very simple. What you want to see is BNB pull back, ideally hold the bands, and that then sets up a now push into the 1,000s there. So that's what I would be looking for on BNB. And the invalidation for that would be, first of all, closing below this low. But you could just keep it simple and say closing below 900 as well. That's going to be your bearish reversal signal. And then you're looking at trading it from 900 to 800 instead. So good. Trend is your friend. Looks strong. Now just waiting for any pullbacks for potential setups on BNB. So that really is it for the markets. That's the Friday update. Let's take a look at the data. So looking at the order flow data, we got Bitcoin at the top here, got open interest, and let's actually get the open interest for altcoins, and let's have a look at positioning since FOMC. So everything excluding Bitcoin at the bottom there. This was the FOMC candle. From the open to the high, Bitcoin went up 2.3%, while open interest, so longs and shorts on the futures market, increased its positioning by a larger amount, so increased its positioning by 6.19%. So that is longs and shorts getting a little over positioned into a 2% move, since there's 6% of more interest in the market since FOMC. So what you're seeing here is on the low time frames, this is the 1 hour chart, you had a little reversal here. Price swept the high on the 1 hour chart. That formed a double top, which was then confirmed once this low was then closed below. So that's the reversal confirmation. That's the structure level after the double top. And that's leading to a further dip here to take out some of this positioning, which is perfectly fine. Of course, traders are going to get overpositioned, overexcited after a big data day like that. So now you just want to see, can we form a higher low? Can bulls now step in here and show demand? Currently, price is up 1%, and open interest has been bleeding, so positions are getting wiped, and it is now up 3%. Now, of course, open interest is longs and shorts. So this isn't just going to be shorts, longs who are under pressure. If price starts reversing, then shorts will have to close. So you then look at your price action to determine who is in control, longs or shorts. And it's simple. You have a low here. If price is going to be bearish, what you'll see is probably a sharp dip and price start to accept around this level, and that can lead to downtrend continuation lower. That's of course going to be met with that 115k level that I said is all important. And in the bullish example, you just chop and you churn the position slowly, boring everyone out as we head into the weekend, and eventually it then reverses and turns. And people get chopped up. They open and close their positions within this sort of price action because they don't know what to do. They don't know what to do when price just is seamlessly going nowhere, but at the same time bleeding lower. It absolutely wrecks a lot of traders, and that can lead to this open interest and bleeding lower without price having to absolutely just nuke and form the bearish path. So that's the bearish path, that's the bullish path. As I said, 115k is the all-important level. So looking at the positioning for altcoins since FOMC. Now they are up 5.52% even still, and at the highs we're up 8.5%, so much more than Bitcoin positioning. Therefore, we're not actually seeing this retrace as much as Bitcoin has today. Interesting to see how this finishes in the New York session, but could suggest that people aren't taking profits on altcoins after the short-term moves like you saw in Solana, failing its breakout, and now you're seeing the breakout traders get wrecked, which can lead to this open interest just having to pull back a bit as those 100x Moonboy longs have to get forced out of the market. So open interest on altcoins still elevated. Could see Bitcoin just further chop and dip around here just to wipe out some more positioning. But you want to see buyers then step in and ideally form a higher low from this FOMC meeting, because again, if buyers don't step in, well, that's showing that after 2 days since FOMC, the sellers actually took control. Whereas you want to see the buyers take control if there is a bullish reaction to FOMC. So that is the analysis for Bitcoin and the order flow. Let's take a look at the ETFs quickly. So what have we seen? Inflows yesterday after outflows on the 17th. So outflows came in on a Wednesday. Now BlackRock, they do report a day late, so you have to keep that in mind as well. So this actually could have been bigger outflows, since BlackRock had a 0 day on the 18th. So when BlackRock actually brought in 0, that was their day for the 17th. The rest all report the same day. So just something you should know when looking at ETF flows, but good to see them returning with 163 million. That's what you want to see, just a steady bid back from the ETFs, showing that they have a bullish reaction to the FOMC meeting in the coming days. And we look at Ethereum quickly, similar story. So some outflows in the last couple of days, but seeing inflows return. So just want to see that support price again since that FOMC meeting and show that assets in crypto are reacting bullishly to it. Last thing, we've got the Yubit options expiry. So this is today. I saw a comment from one of you talking about the triple witching, and of course that's a stock market thing very much so. Has a big impact on all markets, of course, since everything's correlated. And the most interesting part for crypto is obviously the Yubit options expiry, and this is a big one. It's for Q3. So the big levels are 70 and 60 on the Yubit chart. So pull up Yubit here. We had 60 and 70, of course, being big levels. And these options levels, price tends to stay pinned between them as you head closer and closer to the expiry, because the incentive is to price all of the calls at 70 as worthless, so they get wrecked, and that happens when price is below it. Now, of course, you can roll it over. Options are more complicated. I'm not going to go into how options work in today's video, or it'll end up being another 40-minute one. And of course, on the opposite side, puts at 60. If price closes above, then they get wrecked. So that's why price likes to stay pinned between the closer you get to the meeting. If you break above or below, it can trigger a huge move. Now we have some closer levels. So we've got 67 and 65. This is really what we're looking at today as pinning price, which leads to volatility getting dampened a little bit until those options do expire. So 65 and 67, you can already see what's happening here. Go to lower time frames. As we get closer and closer to the expiry, which is today. Sorry for that alarm. Price got supported over here. Market makers are not incentivized to push it below. So like this. Price got supported again here. And then price found resistance here and here. And when you compare it to the actual Bitcoin chart quickly, so that we can see the levels in USDT terms, so what we would know. Let's go to the 4 hour. Let's remove some of this. This 65 level is essentially going to be your lows over here. So again, it's around that value area low that I shared with you. This is yet another confluence that even the ETFs, due to options, have this as a pinned level so far until the options are expired. And to the upside, the resistance we can see is coming in here at the 67 level on IBIT. It's off this candle. So pin between 117.9 and 114.8. Once the options expire, you can actually see this consolidation break out either way. So we chop around, and whether it's to the upside or whether it's actually a big move to the downside, that's when you can then see your next volatility expansion. And of course, on the IBIT chart, those are the levels. It's going to be 67 and 65, which sets up the volatility expansions. And between there, you'd expect 65 to hold as support and 67 to hold as resistance until it breaks. So that's the dynamics there. Hope you guys enjoyed this one. That is morning markets.